Yeah, well, and I think you raise an interesting point there. There's a lot of talk about, becoming a profession and all that sort of stuff. But, really, if you actually look at what's going on, you've really got government sort of interfering with commercial transactions between allegedly adults.
Yep.
They went to wars over this sort of stuff.
But look at LIF. LIF mandating commission caps. Well, I don't think that's healthy myself.
Yeah, and a lot of the LIF legislation, or the LIF reform, as it was called, it went into the face of what actually happened in the UK.
Yeah.
I think it was Einstein that said, if you do the same thing and expect a different outcome, well, there's a word for that.
There is a word for that.
But we embraced it as if, oh no, we're Australian, we know better, and it'll be different for us. Well, guess what? It hasn't been.
No. And that goes to, I guess, to the core of the way in which policy is formulated and the maturity of the conversations around that, and the participants in that, and really the way in which all those inputs are distilled and given some sort of form, because I worry that the quality of that process is really what's holding us back and making it harder and harder to get good outcomes, just not just for retail consumers, but for small business people too. I mean,
yeah,
people just trying to make a living.
Yeah. Well, the thing that sort of gripes me about a lot of the industry discussion around laws is we have change, and then we don't have any analysis of that change. And before, we've sort of put it on the completed tray, and then everyone's running around with, oh, well, let's do this next. So, for example, when Trowbridge came out and did his life insurance review, 50% of what was used there was pre-FOFA.
Yep.
So they never actually did a formal review on what was the impacts of FOFA and the advice that was being delivered under FOFA.
Yep. Because
quite frankly, if you've got FOFA, where you've got to act in your client's best interest, the LIF reforms are really unnecessary.
Exactly. Look, and to go even further, if churn was endemic, and my understanding was that the allegations of churn is what drove a lot of this. Well, if churn was endemic, as they imply in all those sort of reports, well, where was ASIC?
Yeah.
People out there churning clients, well, there's a process involved where a regulator it gets involved and determines whether people are getting ripped off or not. Well, yeah. Did that happen? I didn't see it happen.
Yeah. Well, I think there's been some evidence come to hand that it actually wasn't as rife as what it was portrayed.
Well, I think Trowbridge, didn't he identify, 50 instances, across an industry of thousands of advisors. Now, that's my recollection of his report. So that's a tiny proportion of the market. And look, in my travels, I've met pure risk specialists, often in this industry, and they're without exception, people who are just really focused on delivering that particular service to people, and they will explain in detail the amount of detailed examination that's required up front to make sense of a client's insurance position. Someone's got to pay for that. They either bear the cost themselves, get the client to pay, or they get some sort of other offset. Well, obviously we've seen the outcome.
Well, to me, this was just to ensure that I wasn't I probably am a little bit crazy, but just to make sure I wasn't completely crazy, I went back and had a look at some of the articles I wrote during the time. And at the time I was saying, the thing that concerns me about all the people that are in this discussion is they don't actually understand what commissions really is. And what it really is it's a means of financing the fee to pay for advice.
Yep.
That's effectively what it was. And it's been interesting talking to some of the older guys in the industry. We all started basically through writing insurance.
Yep.
That gave you some cash flow and the ability to actually get out and do that. Now, when FOFA changed and they said, you can't have commissions, well, I thought that was reasonable because If you've got, $100,000 to invest, well, guess what? You've got some money to pay the fee. But if you're a 25-year-old who's just trying to get started in life and trying to have a mortgage and all this sort of stuff, you don't necessarily have the money to go out and seek advice. And that's where the insurance commission basically bankrolls or finances the advice fee. And that was something that these guys never considered.
No.
And so now they've said to the people providing that service, we're going to give you a 50% pay cut. And by the way, we're going to extend the period of time that, we can potentially claw that back. And they wonder why no one wants to do it.
Yeah. All the alternative is you go and charge the client direct. Well, good luck. I mean, that's, I don't know if there was any analysis done of consumers' capacity or preparedness to pay that fee. And so therefore we have an underinsurance epidemic. So, you just put two and two together.
Yeah, and I mean, the funny thing out of all this, well, it's funny, but it's not, is, of course, what happened to premiums over the same period where commissions were falling off a cliff. Yeah. Premiums were skyrocketing. Yeah. So I'm not quite sure how that's in the client's best interest.
No.
There's always winners and losers of every political intervention. It's unfortunately the advisors are usually on the losing end.
Yeah. It's certainly been my experience in the last decade or so anyway.